Do you ever stare at your QuickBooks screen, utterly baffled by how to actually, pay someone? You've tracked your income, categorized your expenses, meticulously recorded every transaction, and now it's time to send money out. Whether it's a vendor for those essential supplies, a contractor who just finished a crucial project, or perhaps even an employee, though we'll touch on payroll separately. The act of transferring funds from your meticulously managed accounts to someone else's can feel like navigating a digital labyrinth. You're not alone. For many small business owners, freelancers, and even seasoned bookkeepers, this seemingly simple task can be surprisingly complex, fraught with options, settings, and the nagging fear of making a costly mistake. Today, we're going to demystify the process. We'll explore the various avenues QuickBooks provides for paying individuals and businesses, breaking down each method step by step. We'll cover everything from a classic handwritten check recorded in QuickBooks to the streamlined efficiency of online bill pay, and even a glimpse into the integrated payroll functionalities. Our goal is to equip you with the knowledge and confidence to navigate QuickBooks payments seamlessly, ensuring your vendors, contractors, and employees are paid correctly and your financial records remain pristine. So, let's dive in and unlock the secrets to mastering payments in QuickBooks. Method 1. The classic writing and recording checks. Let's start with the most traditional method, writing a physical check. Even in our digital age, checks are still widely used, especially for vendors who prefer them or for one-off payments where electronic transfer isn't practical. QuickBooks allows you to accurately record these checks, linking them to specific expenses or bills. The primary way to do this in QuickBooks Desktop is through the Write Checks function. You'll find this under the Banking menu. When you open the Write Checks window, it looks much like a blank check. Here, you'll select the bank account from which the money will be drawn. Crucially, you'll then choose a P. This is a person or company you're paying. If they're not already in your vendor list, you'll be prompted to add them. It's important to enter their correct name and any relevant details for future tracking. Next, you'll input the amount of the check. Below that, you'll see a section for expenses or items. This is where you categorize what the payment is for. For instance, if you're paying for office supplies, you'd select the Office Supplies expense account. If you're purchasing an inventory item, you'd select the relevant item. This step is vital for accurate financial reporting and tax purposes. Each payment needs to be tied to a specific reason. You can also add a memo for your own reference, perhaps the invoice number you're paying or a brief description of the service. Once all the details are entered, you'll click Save and New to save the check and move to a new one, or Save and Close if you're done. What QuickBooks does here is record the transaction, decreasing your bank balance and increasing the corresponding expense or asset account. If you're printing checks directly from QuickBooks, which is a popular feature, you then go to File, Print Checks, and select the checks you just created. QuickBooks will pre-fill the check information onto your check stock, saving you time and reducing errors. For QuickBooks Online, the process is similar but typically accessed through Expenses, Vendors, or directly from a new button where you select Check. The interface is more streamlined, but the core principles remain the same. Select the bank account, the payee, the amount, and categorize the expense. QBO also offers check printing services, often integrated with third-party providers. Method 2. Streamlining with bill pay, paying bills you've entered. Often, before you pay someone, you receive a bill. QuickBooks offers a robust enter bills and pay bills workflow, which is highly recommended for businesses that accrue expenses and need to track them before payment. This method provides greater control over your payables and helps manage cash flow effectively. First, you enter bills. This is typically done when you receive an invoice from a vendor. In QuickBooks Desktop, go to Vendors, enter Bills. You'll select the vendor, enter the date of the bill, the due date, the invoice number, and the amount. Just like with checks, you'll categorize the expenses or items associated with this bill. For example, if you received a bill for a new server, you categorize it under computer equipment. Entering bills doesn't affect your bank balance. Instead, it increases your accounts payable, a liability account that tracks what your business owes. Once bills are entered, they sit in your QuickBooks system as outstanding liabilities. When it's time to pay them, you use the Pay Bills function. In QuickBooks Desktop, go to Vendors, Pay Bills. This window will display all your outstanding bills, allowing you to select which ones you want to pay. You can choose to pay one or multiple bills at once. You'll also specify the payment date and the bank account from which the payment will be made. Now, here's where the payment method comes in. You can choose to pay by check, either by printing directly from QuickBooks or by manually writing a check and recording it here. Or you can often link to online bill pay services. If you choose check, QuickBooks will generate a check entry for the selected bills. If you're using an integrated online bill pay service, which we'll discuss next, it will initiate an electronic transfer. Method 3. Paying employees a glimpse into payroll. While the core focus of this discussion is paying vendors and contractors, it's worth briefly touching on paying employees, as it's a distinct but related function within QuickBooks. QuickBooks offers robust payroll services, either as an integrated feature, QuickBooks Payroll, or through partnerships with external payroll providers. Paying employees is much more complex than paying a vendor because it involves calculating wages, withholding various taxes, federal, state, local, deducting benefits, and remitting those withholdings to the appropriate government agencies. It also requires filing various payroll tax forms. QuickBooks Payroll automates much of this complexity. You enter employee details, their pay rate, and their tax withholdings. When it's time to run payroll, QuickBooks calculates gross pay, all deductions, and net pay. You can then choose to pay employees via direct deposit, which QuickBooks can facilitate, or by printing paychecks. QuickBooks also tracks your tax liabilities and helps you prepare the necessary tax forms. Understanding how to pay someone in QuickBooks is a fundamental skill for any business owner or financial manager. By mastering these different methods and adhering to best practices, you can ensure that your financial operations run smoothly, efficiently, and accurately. It's about leveraging the power of QuickBooks to not just record transactions, but to manage your cash flow, maintain strong vendor relationships, and ultimately build a more successful and financially sound business. With that said, thanks for watching, and until next time.